So we are thrilled to see you all joining in such large number, and we realize that not just audits and assessments, investigations are raining, but they are raining quite painfully. That everyone in the industry is skeptical as to how to handle these. So what we have done is in this webinar, so we have divided our slides into 5 categories. One is starting, we'll discuss as to what all the activities that can be initiated by the officers and who all officers can conduct those activities. Then what are the types of activities that can be initiated? Then third, what are the to-dos for us as taxpayers when these activities are initiated against us? Then as per our experience and as per various documents available in public domain, what are the documents that are asked, that can be asked and that are asked by the officers, and what are the checks they apply, so that we can be pre-ready with all those documents and checks. And lastly, we'll discuss the way forward in light of these ongoing audits and investigations. So starting with the administration, so first two things are audits and assessments. So as we see that an audit is conducted by the officers, jurisdictional officers under section 65, and assessments are also undertaken for like scrutiny of assessment, scrutiny of returns, or for non-filers of returns. So all these things, audits and assessments, are undertaken by jurisdictional officers. Now the question arises is, these special agencies like DGGI, anti-evasion, etc., can they also conduct audit and assessments? So here it is important to note that in assessments, they give power to a proper officer to conduct assessment. However, in audits, they give power to the commissioner. So while proper officer is defined as any person who is entrusted the powers under the act, and all these DGGI officers have been entrusted powers, they have been appointed as proper officers, so they can do assessments. But with respect to audits, since the word uses commissioner, so technically only jurisdictional officer can conduct the audit. However, practically these audits and assessments both are undertaken by jurisdictional officers, and special agencies do not get into the same. Now coming to investigations, wherein there are multiple parts: inspection, search, seizure, access to business premises, inspection of goods in movement, summons, arrest. In this case, both jurisdictional officers as well as special agencies like DGGI, they can initiate investigations against the taxpayers. Now, we ran a poll wherein we asked that how many of you have faced multiple audits, assessments, investigations by different wings of department for same financial year. So almost more than half of you have faced these investigations by multiple wings, which is the reality. We also see in various our clients that same audit is being conducted by audit wing also, DGGI, as well as the jurisdictional department. So all these wings come and harass taxpayers with their own queries on the same subject matter. So now we'll discuss whether legally it is permissible under law or not that all wings can take up proceedings against the taxpayer at the same point of time. So here it is important to note that the only bar under law under CGST Act is with respect to section 6(2)(b), which deals with that if a proper officer under SGST Act has initiated proceedings on a particular subject matter, then the officer under CGST Act cannot initiate proceedings. So here it is important, and vice versa, of course, that if CGST officer has initiated proceeding, then SGST officer cannot initiate. So the important part here is the subject matter. So by subject matter, we have to see that if it is an audit, so audit is a quite wide area. So different wings can say that our subject matter is not exactly the same as other subject matters. So they can parallelly and simultaneously ask for your balance sheet, trial balance and returns, and say that we are going to investigate different matter. So yes, legally they can do it. Only if, like for example, the current running issue secondment GST on RCM and for secondment employees. Since it's a particular subject matter, so on that subject matter, multiple officers of state and center cannot come and investigate at same point of time. And there also the bar is only state versus center. So if in one state you are getting investigated on a particular issue, in other state for other jurisdiction you can still be investigated by those state officers. So the bar is only vis-a-vis center and state. Now coming to the various internal documents and judgments in this regard. So there was this internal letter which was issued which instructed officers that if an intelligence base, so if DGGI is undertaking any investigation, if they are initiating that, then they cannot transfer the case to their state counterpart because DGGI has initiated. So they themselves have to conclude it. They have to issue the show cause notice and conclude it. They cannot transfer it, and vice versa also. Now, with respect to judgments, on this letter only, there was a judgment that simultaneous enforcement actions were initiated by different authorities on same subject matter. So, the Punjab and Haryana High Court quashed the proceedings, saying that there is a specific circular in this regard that they cannot be proceedings on same subject matter, and the authority who has initiated should reach to the conclusion and not transfer the case to other. Then there was one case of again Punjab and Haryana High Court wherein investigations were initiated for ineligible ITC from different vendors. So different officers had picked different vendors that credit from these vendors are ineligible. So as SC said that the subject matter is same, that is ITC. So only one officer can investigate and simultaneously other officer cannot. So the court said that since the subject vendors are different, so subject matter cannot be said to be same. ITC is very broad because there are two different ITCs from different vendors. So the proceedings were held to be valid. So different officers were allowed to proceed with their proceedings. Lastly, there was a case where audit wing as well as DGGI as well as anti-evasion all simultaneously initiated proceedings. So in this case, not legally but on the natural justice grounds, the Calcutta High Court held that since proceedings have been initiated by one authority, so they should take it to the logical end, and subsequent proceedings initiated on the same for the same period should be quashed. So this point we would like to highlight. This is only on natural justice ground because otherwise different wings can because these were all center wings. So these all center different wings can initiate proceedings on the same subject matter because bar is only between state and center. Now coming to different types of activities. So officers can initiate audits against taxpayer, they can do assessments, and they can initiate investigations. Now starting with audits. So there are two types of audits that are conducted by the officers. First is audit by tax authorities and second is special audit. So starting with audit by tax authorities, this is a very broad category which we face in our day-to-day routine clients, that audit is initiated to verify correctness of turnover, taxes, refunds, ITC, and compliances performed. So basically, it covers everything under under umbrella because whatever turnover you are declaring, taxes you are paying, refunds you are claiming, ITC you are availing, and compliances also. So they can verify anything and everything. They can perform it at your premises also, and while asking documents at their own premise also. So they can conduct it from office by asking documents over mails and messages, etc. Audit can be conducted for one financial year, part of financial year, and even multiple financial years. So now we are seeing that audit is being conducted for 2 years, 3 years together. So 17, 18, 18, 19, 19, 20, the authorities are conducted audit together. One important point is that as per law, audit needs to be completed within 3 months from the date of commencement. So the important question is, when will audit be set to be commenced? Under law, it is given that it will be set to be commenced not on the date when officer has asked the documents for the first time. It will only commence only when you have provided the documents. So the next question is whether it will start when you have provided some set of documents or when you have provided all set of documents that have been asked by the officer. So logically, it should be when all documents asked are given, then it should commence. If he is visiting the premises, then actual initiation of audit will be the commencement date. Here, we also wish to highlight that when you receive a audit report, the final audit report or the draft audit report, therein in the format they mention that this is the date of commencement. So we can verify that date of commencement also if it is as per the law. And secondly, we have seen practically that in the audit reports the date of commencement is so and so, and the final audit report is received much later than 3 months. So practically they are not following these timelines. So we can challenge those audit reports on this ground as well, that it should have been completed within 3 months, and after 3 months, since it is getting completed, so either there should be a proper extension that should have been filed by the officers, or it should be said to be invalid. Now, next important question arises is, what is the criteria for selection of audit? Like how these officers select taxpayers uh, for to conduct the audit. So, very first thing which we got, so there is a CBIC GST audit manual. So CBIC issued this audit manual, and this is a very detailed document, and applaud from our side from to CBIC that they have implemented all the permutations, and they have incorporated all the permutations and combinations that should be there while doing an audit. So what all checks, what all documents the officer can ask, everything is incorporated in this document. And if we uh, uh, pre-use this document to verify it internally, then we will be much off at a better position. And in the audit, we can, when the audit is actually conducted, so we will be knowing that what all points they are going to ask, what all points they are going to audit. So we can be pre-prepare ourselves for that. So our recommendation is that you must follow, must visit this audit manual and go through this and follow this in your routine business. So in this audit manual, there are certain risk parameters that are given that they apply while selecting any taxpayer for the audit. First is, if any audit has been conducted in previous years, and if the taxpayer delayed in filing, in submitting the documents. So we see that whenever documents are asked, the taxpayers are skeptical as to what all documents need to be given and what all information can we give and not give. In this process, they take a lot of time and there is a delay. So normally people then file extensions for the submission of documents. So this point is noted by the authorities for subsequent audits. So they take you as a suspicion taxpayer, suspicious taxpayer, and they would regularly conduct audits because of this reason. Second is, if you have a new registration, then it's highly likely that audit is conducted. And if you have never been audited previously, then also audit will be done. Basis the, of course, size, turnover, etc., we see that audits are selected. They also verify the ratios. So they have the data, returns data for all now, for all 5 years now. So they compare that if there are major fluctuations in turnover, uh, uh, turnover to assets, loan to assets, exempt supplies to total supplies. So then also they can initiate the audit. Then quality of taxpayers' books and records, at how they are making books and records. Then if there are any bankruptcy cases or there is inconsistency in filing of returns by the taxpayers, so all these accumulate to a reason for the auditors officers to conduct the audit. So we again ran a poll whether before initiation of department audit, are taxpayers receiving a prior 15 days notice from department regarding conduct of audit. So 81% of the people said that they are not receiving this intimation before conduct of audit. Now you'll be uh, uh, amazed to know that in the law it is specifically given that a 15 days prior intimation under ADT 01 must be given before commencement of audit. Post that, once the audit is commenced and documents are asked, a draft audit report is to be shared by the authorities. So this is not a mandatory thing, but it is given as a, they may share, and generally we have seen they share audit memos or DARs, and then we file replies, and then finally audit report has to be concluded within 30 days of conclusion of audit. So in the entire process, after 30 days, once the audit is concluded, within 30 days, they have to issue the audit report in ADT 02. And once they have issued the audit report, then the case is transferred to the jurisdictional department and they can initiate proceedings under 73 or 74. Now, again, referring to CBIC GST audit manual. So, apart from the law, there are different criteria and key points given under this manual, which says that audit plan, whatever audit plan the commissioner is designing, that needs to be approved by the additional and joint commissioner in case of medium and large client, and by deputy or assistant commissioner in case of small units. So, we never check this, but this is the process, this is the internal guidelines being given to officers that they need to get this plan approved. So we can always ask the officers whether this plan is approved or not. The audit manual also says that accredited status will be given to the taxpayers, where after conduct of audit, the officers feel that they have been a compliant and genuine taxpayer, so they can give them an accredited status basis which the frequency of audits will be reduced. So for 3 years, they will not be audited again. This is presently not being there, but the practice will be followed in future. Last is for medium and large units, they have been instructed to follow premise-based audit only and not office-based. But this is generally not followed. They use both the mediums, either office or premise-based. In the internal timelines, they are also instructed to do the entire process from starting asking for documents to planning to report. For large taxpayers, they need to complete it in within 6 to 8 working days. For medium, 4 to 6, and for small, 2 to 4. This is for one financial year and for any subsequent financial year. So if they are conducting audit for 2 to 3 financial years, then 25% of the working days will get increased. But practically nobody is following these timelines. They generally take 2 to 3 months to conclude the audit. Coming to the judgment, so there was a case where draft audit report as well as final audit report was issued on the same day. So the challenge was upheld by Odisha High Court, stating that the taxpayer was not granted any opportunity to reply or to furnish their statements, so that these reports are invalid. Now, coming to special audit can only be conducted for 2 cases: if there is a doubt in valuation or if there is a doubt in availment of credit. At any stage of scrutiny inquiry, so if any inquiries have been initiated and at any stage they feel that there are issues with respect to valuation and ITC, they can nominate their own chartered accountants and cost accountants, and they can transfer your case. They can ask you to get these aspects audited by them, and post conclusion, again, proceedings under 73, 74 can be initiated. Now, coming to assessments, so we are done with audits. Now, assessments, there are 4 types of assessments. One, the most common one is scrutiny of returns that we all face, that departments scrutinize our returns and send intimations with respect to clarifications that require. Second is, if we are failing to file our returns, then also assessment is there. If we are liable to be registered, but we are unregistered, then also assessment is there. And last is summary assessment. So starting with scrutiny of returns, the process says that the officer needs to intimate the discrepancies in ASMT 10, which is being followed by the officers. Within 30 days, taxpayers need to reply to this ASMT 10. If the reply is found satisfactory, then officer needs to issue ASMT 12 saying that this is closed. If the response is found not satisfactory, then they can initiate proceedings under 65, 66, 67, 73 or 74. Now coming to, so there are various SOPs, internal instructions issued to the field officers that how they need to internally follow the timelines, etc. So as per internal timelines, once reply to ASMT 10 is given by the taxpayer, they need to issue ASMT 12 within 30 days. If they feel everything is fine, they need to issue ASMT 12. However, practically, we have seen that they ask the requirement, we submit the replies, and then there's no coming back by the officers for 6 to 8 months, years, etc. Technically, they are required to issue SMT 12, and we must insist if they are satisfied by our responses and they say that there is no further proceeding needed. So we must insist that they issue us ASMT 12. Otherwise, they'll have a long period of 5 years to initiate proceedings under 73, 74 on that matter again. If they are not satisfied, then of course they can initiate proceedings under 65, 66, 67 within 45 days from ASMT 10 if no reply furnished. If reply is furnished, then within 30 days from receipt of reply. Similarly, there are timelines for proceedings under 73, 74 as well. Now, in another SOP for return scrutiny, it tells that what all documents they can use for scrutinizing the returns. So it is important to note that before issuance of ASMT 10, they cannot ask for any documents. They have to assess the returns that are filed on the portal. So they can assess the returns, statements, and other data available on portals, e-waybill portal, GST portal, and basis that only they need to find the discrepancies and intimate under ASMT 10. Also, they generally do not consider the payments made through DRC 03. So they consider 1 and 3B and they issue the discrepancy that in 1 you showed this much liability, however you paid less liability in 3B. So this is a discrepancy. Many a times taxpayers realize later and they pay through DRC 03. So they have been instructed, the officers have been instructed that they must see DRC 03 as well before raising ASMT 10. Now coming to a judgment, so there was a case when ASMT 10 was issued, certain points were raised in ASMT 10. However, when final notice under DRC 01 and DRC 07 under section 74 were raised, then there were additional grounds as compared to what were raised in ASMT 10. So the taxpayer went to Madras High Court saying that this cannot be the case. The issue must be there in ASMT 10 and only that you can issue a SCM. So the Madras High Court thankfully favored assessee and said that matter should be remitted back to the reassessment because new ground cannot come, new point cannot come in SCM directly. Legally, we feel that since scrutiny of return is not the only process through which SCM can be raised, and SCM can be raised independently also. So even if in DRC 01 there is a new point, then officers are legally allowed to do it. But since this judgment is in favor, so taxpayers can use this if there arises such case. Now coming to assessment of non-filers. So if you're not filing your GSTR 3B, so officers are mandated to issue notice in GSTR 3A after 5 days of due date of GSTR 3B. So this 5 days time is not coming from law, but again, this is coming from a manual, GST audit manual, which says that and various instructions that they are required to issue notice in within 5 days. And there are circulars, state circular as well as CBIC circulars, which says that they need to follow a proper process. Even before the due date, they need to intimate and send a reminder for to the taxpayers, stating them to be filed a return. Once the due date is there and taxpayer is not filed, again a reminder should be sent. And then after 5 days, notice needs to be sent. Even if after notice it is not furnished in 15 days, then best judgment can be done by the officers. After issuing best judgment assessment order, even then if within 30 days the taxpayer furnishes 3B, then best judgment order assessment order will stand to be withdrawn. So for non-filers, it is important to note that as per the board and as per the government, they have casted the responsibility and onus on the officers to ensure that taxpayers are paying are filing GSTR 3B. So all the circulars indicate that they need to keep following up with you. Officers need to keep following up with you so that you can file returns. Third is assessment of unregistered person. If we are liable to be registered and we fail to obtain a registration or our registration is cancelled for any reason, then assessment under section 63 can be taken. Again, in this also best judgment assessment will be passed. Timeline, they have 5 years from date of furnishing of annual return. Last is summary assessment, section 64. So if there is any external evidence that is received by the officer showing evasion of tax, then they can initiate summary assessment only after permission of AC and JC. So additional commissioner and joint commissioner permission is required to initiate summary assessment. Now, the last part is we've covered audits and assessments. Last part is the investigations. In investigations, various activities are undertaken: inspection, search and seizure, arrest, summons, and access to business premises. Now, coming to inspection, search and seizure. First, a search warrant is issued. This is a must. And after that, seizure order or prohibition order. So if they are seizing any document, goods, etc., they will pass a seizure order. If they cannot seize them because of their nature, perishable nature, etc., they can also issue a prohibition order wherein the goods, etc., will remain in your premises, but you are prohibited to use them. So what all things they can seize? They can seize documents, books, things, anything that that are their goods, etc., that are useful for or relevant to any proceedings. So in things there are judgment that even money can be seized. They have powers to break doors, almirahs, electronic devices. So they can do that. We cannot deny, or we cannot. If we say that we cannot give access to you, they have the powers to break doors, etc. There is an interesting point in the law that they can also fake as purchasers. They can come to your premises, to your shops, to your offices, and say and buy a product to see the documentation and inspect the documentation, whether you are issuing right documents and how you are undertaking your transactions, whether you are issuing proper tax invoice or some cash memo, etc. So they can do that. And once their inspection is done, you are required to issue a credit note and refund them their money. Provisional release of goods seized is allowed on execution of bond. Automatic release if SCN not issued within 6 months. So if after a search SCN is not issued within 6 months, then goods are required to be released by the officer. So we can demand that. No arrest can be done in case of inspection, search and seizure. Now coming to arrest, in what all cases arrest can be done? So firstly, the officer must have reasons to believe that arrest is required, that the offense is so grave that arrest is required. Offenses have also been specified, which are again very wide and vague. If you are making supplies without invoice and you have intention to evade tax, if you are issuing invoices without supply, intention to wrongfully avail ITC. So you are only issuing invoices, but there is no genuine supply. So that means you are wrongfully availing ITC. If you are availing ITC without receiving supply, then also it's a case for arrest. And if you collect tax from a person but fail to pay to the government beyond 3 months, then again arrest can be undertaken. So that amounts, etc., given. So for every 5 crores and exceeding liability, imprisonment for 5 years plus fine is prescribed, and for 2 to 5 crores, 3 years imprisonment plus fine is there. So there are various news that are going on for decriminalizing offenses under GST. So these discussions are going on, and we are hoping that this happens, because arrest, etc., is a very serious and a grave action that authorities take. So if all the offenses under GST are decriminalized, then at least we will not have this this fear of arrest under GST. So what are the conditions to arrest? First is there needs to be an intention to evade tax and element of mens rea. So officer need to prove that there is an intention and mens rea intention. Second is the reason should not be ambiguous. Unambiguous and clear reasons should be given while doing an arrest. Then proper investigation should be done. No arrest should be done if the assessee is cooperating in the investigation. So this is very important. Normally we see that even when we are cooperating, we are rendering statements, we are giving all the documents that are being asked, then also they harass us saying that they'll arrest. So there is this is the condition, that if we are cooperating, timely furnishing the information, and ready to pay the tax, then arrest cannot be done. For procedure, they need to communicate the grounds of arrest to accused and issue an arrest memo. And there are various guidelines issued by Supreme Court in DK Basu case that need to be followed while going ahead with the arrest. Next is summons. So there are various guidelines, internal guidelines that need to be followed by the officers for summons. To be used as last resort, to be issued by superintendent after obtaining prior written permission from JCAC. So summons can be issued, though in law it says proper officer, but under notification they have authorized superintendent to issue summons only after permission of AC and DC. Not to be issued to senior management officers. So there is a specific provision which says that it should not be issued to senior management officials of companies unless clear indication of involvement in decision making process is leading to loss of revenue. So if you see this phrase, involvement in decision making process, they have kept it very wide and vague. So for every company, senior management will be in some way directly or indirectly involved in decision making process. So to that extent, they issue summons to directors, owners, etc. And technically, you cannot come out of this phrase because this is very wide. Summons cannot be issued to call documents that are already available on GST portals. So for all the returns, statements, balance sheets, and annual financial statements, or whatever is available in public domain, for that summons cannot be issued. Uh, if uh, if the taxpayer fails to appear even after 3 summons, then revenue has the right to complain to the judicial magistrate. Now, last is access to business premises. So, joint commissioner and above rank officers can only access to business premises. Whatever documents they are asking, we need to furnish within 15 working days from requisition. Effective January 1, 2022, Department directed to use prescribed formats for summons, arrest, authorization for search. So we need to check that those formats are followed or not. Now we have covered everything with respect to what all activities can be initiated against a taxpayer and who are the authorized officers and what are the timelines they need to follow and what process they need to follow to initiate those activities. Now, once these activities are initiated, now what as a taxpayer we need to do, that we'll discuss in next part. So my colleague Simran is with me. She'll be taking you through with the to-dos and what are the documents and general areas that are analyzed during these activities. Over to you, Simran.
Thanks, Aasmee. Good afternoon, everyone. Now that we have become well versed about the types of actions which different officers can take under GST, we must know what a taxpayer has to ensure during the entire process of any action taken by the department. So we have divided the entire process into 3 parts, like what a taxpayer needs to ensure when he receives a communication from the department, what he needs to ensure when before filing a reply or before giving any statement, and lastly what actions or what points you need to ensure during giving the reply or during giving any statement. So firstly, on receipt of any communication, you must check that whether the officer or the office which has given the communication, is he authorized to issue that or not? Has he issued it keeping in mind the timelines which are given under the GST law? Thirdly, there must be DIN on all communications, whether shared by center or state department. So taxpayers can also check whether the DIN that is mentioned on the documents is valid or not. So there's an option in CBIC website wherein you can simply put the DIN and the validity of the communication will be shared. Also, taxpayers need to ensure that if any communication is coming by mail also, in that also DIN is to be present. So there are several forms and documents which are prescribed. So the whatever forms are being issued by the department, they must be in the specified format. Also, the document should contain the signature. As we discussed in the last slides, the audit plan should be approved by the relevant officers, and the proceedings should not be already initiated on the same subject matter concurrently. Now, before filing a written reply, you must seek time if you feel that there are certain documents which are not readily available and you need time to prepare those. In the coming slides, we'll share the list of documents which can be readily provided to the authorities. Secondly, the whatever document we are preparing should be verified by the company's legal person. Also, if necessary, legal expert can also be hired to check whether the legal provisions followed are correct or not and the way forward. And lastly, we must avoid giving any extra information. We must stick to the point which they have raised. Now, before tendering the legal statement, you must be well aware of the facts of the entire transaction and the law that governs it. You must prepare notes as it what you are going to say. You must practice mock, be aware of your rights, and prepare precise statements. And only the information which is required for them should be given. During providing a legal reply, you must follow the same communication mode. Like if the notice is uploaded on GST portal, you must reply on the GST portal itself. If mail, then reply by mail. There should be a covering letter and acknowledgement of receipt of the documents should be acknowledged. You must always take the option of personal hearing so that opportunity of being heard can be provided to you. And you must maintain all the files and records which you have given, and they should be duly signed with the receiving. During visits by or to department, firstly, you must maintain calm. Half of the battle will be won if you are calm and you do not lose your temper. You must avoid giving extra information. Also, if you feel that there is something which was not paid by you and there are demand raised, then you should voluntarily pay if there is such case. And in case if you feel that the point raised by the department is not correct, then recovery can only be made under section 73 and 74. So if a department is doing any force or applying coercion or harassing the taxpayers, they have an option to file the complaint, and you must ensure that you have substantial evidence to prove that. And also there is an instruction which says that in case of any complaint, the matter will be inquired at the earliest and the disciplinary action will be taken against the officer.
So to give crux, like this is the most important slide and that must be taken care of, because the most important question that comes to every taxpayer's mind is that once any investigation, inquiry or audit has been initiated, how should we behave and how should we prepare ourselves or how should we present ourselves. So basically, as Simran highlighted, the main thing is stay calm, maintain the calm, because if we are legally doing right things, so we should not be afraid of all these investigations. And second thing is, we need to be, all the persons who are rendering statements or who are appearing or meeting department, they should be well versed with the legal provisions as well as the facts of the business, because they will be asking questions with respect to two things only: that what all activities you are undertaking, what are the facts of the transactions, and second is what under what legal provisions you are taking any call. So one need to be well prepared with all the provisions that are there under GST law, the rights they have when they are appearing before the department. So once you are prepared and you have practiced the mock, etc., then this will not create a much problem. So yeah, so you need to ensure this. Yes.
Now moving forward to the documents and areas which are generally analyzed by the department. Before moving forward, we ran a poll on our social media handle to understand the psyche of the industry in large. Like, do they face doubts on what information department can request and what checks need to be applied before submitting such information? The answer is very interesting. Like 77% of the audience feels that there is a doubt while giving the documents to the department and whatever documents they are asking. 15% of the audience do not feel any doubt, and 8% are not sure. Now we have divided this slide into three parts, like what all documents the department can ask under the GST law, then what all documents are given in the CBIC GST audit manual that they can ask, and the other records which are generally practically asked by them from our experience. Under the GST law, they can demand for a trial balance. Now, practically, there is a prevalent issue that the department is asking for state-wise trial balance by saying that a registered person is required to maintain books of accounts. And under GST, different registrations of a company are treated as distinct persons. So you must maintain state-wise trial balance. Here, it is important to highlight that to counter this, you can very well say that books of accounts or trial balance as defined under the Companies Act and ICI, respectively, do not cover trial balance in the definition of books of accounts. So you are not required to maintain trial balance at the first place. And this is the counter that you can take. But still, if the department is relentless, you must try to give whatever documents or codes you have that substantiate the debit and credit balance as equal. And for going forward period, you must ensure that you are preparing something equivalent to or trial balance exact in all state locations. Then they can ask for audited financial statements, cost audit report, income tax audit report. Then they can also ask for the documents which are required to be mandatorily prepared under the GST law. These documents are production related records, inward and outward supplies, ITC, output tax, stock register, different documents under GST, details of advances received, paid and adjusted, names and addresses of suppliers and customers, details of all premises. Now, here a question rises. Firstly, it is important to highlight here that details of all premises shall also include the details of premises where the goods are stored during the transportation process. So you must maintain that also. Also, if any good is kept without any valid document, then officer can very well raise a demand by saying that this is the supply made by you. So you must raise a tax invoice and pay GST on it. And they can ask for any other record. Here it is also important to highlight that whatever document records are maintained electronically, if they are edited or deleted, then a log of those deleted or edited entries should be maintained. Also, these documents are required to be retained for 72 months from due date of annual return or till 1 year from the disposal of litigation, whichever is later. Now, since they can ask for any other relevant records, we can refer GST audit manual also to see as to what all other documents they can ask for. The first one is the registration details. If you are registered with any authority like GST, Customs, GFT, they can ask for those details. GST returns filed, reconciliations, internal audit report, then the report or returns which are submitted to other authorities, the reports of earlier tax periods, 26AS, bank account details, various agreements with suppliers and customers, goods receipt and rejection notes, ledgers, JVs, cash flow statements. Other than these, there are several documents which we have seen that they ask practically, like bank statements, the erstwhile regime records for checking Tran 1 credit, the letter of understanding for employees' salary slips. This is basically currently asked for secondment issue. So these all are the documents which they can demand. Now, like we discussed in the preceding slide, that if you delay in providing any document, then you can very well come into the category of those risk parameters, and audit can be conducted in the future period. So you must ensure that you are ready with certain documents which can be provided on the instant, at the instant go. So we have highlighted those documents in these slides, which can be provided in one go and which are generally available in the public domain as well.
So here, just to highlight that a regular touch or regular communication with the officers is quite important, because if they have initiated any proceedings and they have asked any documents, so we must keep on providing at regular intervals some documents. So again, since in the poll also we have seen that many people face this issue as to what all can be submitted and what all can be asked. So coming to what all can be asked, you can see that the list is quite wide. and the ambit is very, very big. They can ask anything and everything from your records, because if you see production, inward, outward, ITC, stock, trial balance, they can ask everything, because under GST law only these are prescribed, that all types of audit reports, trial balance, that they can ask and you need to provide. And whatever is left is will get covered under the residuary clause, which says that any other relevant record. So in any other relevant record, then CBIC GST audit manual covers all types of things. And then practically they also ask other things. The only argument you have of not submitting any document is that if you are legally not required to maintain any document, that if from no law it is coming that you're required to, for example, state-wise trial balance or HSN-wise inward supply details. So if legally there is no requirement, you can contest that I was not legally required to maintain these documents, so I have not maintained. In future, if it is a suggested document, we can prepare. So to that extent, we can talk with the authorities. But yes, they have powers to ask anything and everything in this area. And now coming to what all we can submit as we have highlighted here in this slide, that these are the readily available things, and these are the documents that are otherwise also sooner or later we need to give, and these are there on public domain. So we should give these documents at least immediately, and buy time for submission of other documents which requires preparation, vetting, and proper analysis.
Moving forward, whatever documents we submitted, there are certain checks which are given on the CBIC audit manual, which they can apply on the different documents shared by you. We have covered only the key points. Like in the audit report, they can check whether there is any qualified or adverse opinion, and they can accordingly see that what are those areas. In the CARO, they can check the records of fixed assets and whether they have been physically verified or not. And if they are not matching with the physical record, where did the fixed assets go, and did you dispose the GST liability on that or not? And they can also see the whatever disputes were raised in the past regarding DT and IDP. In director's report, they can see the overall financial results and whatever important happenings happened during the entire year. Then foreign exchange earnings and expenses to see outward liability and RCM liability. Then whatever are the future plans of the company. In the P&L account, they can see the pattern of the market, and they can see the other income like scrap, insurance, etc., and they can determine the GST liability and valuation from there. Then reimbursement and OPs, they can also check to see the concept of pure agency. From the debit side, from the expense side, they can see if any expense is liable to reverse charge or not. Then they can correlate the expenses and income to see whether there is undervaluation of taxable supplies, and they can also see variation from the previous year figures.
So interestingly, coming back to previous slide, in the audit manual, it is given that P&L account should not be seen only for the credit side, for the income side, because it's not because and they have written that even the debit side contains the more suspicious items, and that can give you more liabilities. One is of course RCM liabilities, and there are many expense incomes that are set off from expenses. For example, all the employee recoveries are set off from salary account. So they have been specifically instructed to see the expense side so that they can see all other incomes that are getting net off from the expenses. So as I highlighted earlier also, this manual is quite vast, and this covers all the permutations and combination checks that they can apply. And we have seen practically officers applying these checks and issuing audit reports after analyzing these areas.
Now moving forward to the balance sheet, they can see the share capital for subsidiary and holding relationships, and seeing the related party transactions and the evaluation thereof. Then fixed assets additions and deletions. The notes to accounts can depict the accounting policy for revenue recognition and other quantitative aspects, like if input is used for other purposes. Then debtors outstanding for more than 6 months, and another important happenings like non-reconciliation of inputs which are lying with the job workers. So if there is a time period is more than 1 or 3 years, then you have to raise a supply bill. Then related party transactions, From the trial balance, they can get familiarized with the accounting coding system, and they can scrutinize further codes. Then the unusual ledger accounts, credit balances, like we covered. From the internal controls, they can see whether the ERP systems in place are reliable or not. So if they feel that they are not reliable, then they can proceed further with the audit or recovery. Then if you are maintaining any parallel software for GST matters, or whether it is integrated with the main ERP or not. From the cost audit report, comparison can be drawn from details across various plans, and they can see the production and clearance records and reconcile with the GST returns for variations. They can refer cost statements for valuation in case supply is made to related persons and the related party transactions. From the tax audit report, different clauses depict different areas which they can analyze. 26 years, they can reconcile the income from services. Then there are various ratios which are given in the audit manual, which they can use to see if there is any short payment or excess availment of ITC or not. Then coming to the legal, general trending legal issues, which you need to be prepared to face in coming future, like the GST on disputed classifications, cross charge versus IST, the different types of recoveries that you make from employees, the intermediary services that you avail, then whatever discounts and incentives you offer, are they required to be added to the valuation of supply or not? From the RCM perspective, the most trending issue nowadays is secondment of employees, then corporate guarantee, which we take from overseas entities and from the non-employee directors. There's a prevalent issue as well in mostly in Haryana and UP, that whatever lease land you take from the state industrial development authorities, that is also liable to RCM. They can ask for ITC reversals in case invoices are not reflected in 2B, non-payment of GST by supplier, in case you fail to make payment to the supplier within 180 days. So these were the trending issues which are there, and you need to be prepared whenever department comes to address these. Now moving forward to the future plan. Firstly, you should be well equipped with whatever positions you have taken in the entire business scenario. Secondly, like, you must be updated whatever industry issues are being raised, because department can very well come to you and raise that issue in front of you as well. Like, presently the trending issue is secondment, employee recoveries. So you must analyze these well in advance. You must analyze the compliance levels and the internal controls that have been placed. You should be ready with all documents that we covered in the last slides. In case you are making any payment under protest, you must immediately inform that you do not agree with the demand and you are just paying these to buy peace with the department, and you can very well contest it in the later stage. In case of important transactions, you must go for expert advices and must opt for the advanced ruling mechanism that is there under GST. And in case there is a doubt in value or GST rate, you can opt for the mechanism of provisional assessment that is there in under GST as well. And pre-audit review is very well suggested, because you need to be well versed of whatever mistakes you have made, and so that you can prepare or pay well in advance.
So there is one prevalent doubt that is there in taxpayers' mind, is that when DGI or anti-evasion department comes and they stay and they force you to pay taxes, so at that time we pay the tax and we cannot mention under protest. So whether we can subsequently file a protest letter. So yes, we can subsequently file a protest letter stating that we were forced at that time, and even after 2 to 3 days when the officers are gone, we can file a protest letter and contest the issue. And yes, as we highlighted, that it is very important to stay updated with what all issues are going in the industry, because sooner or later those issues will be picked by the authorities against us as well. And we need to have very strong internal controls. From the past experience, we should learn that whatever documents they ask or information they ask, now we start uh, uh, modulating or customizing our ERP system to capture those transactions and those data so that we can submit those data. So this preparation is quite important to handle all these audits and assessments and investigations. I think that's it. Thank you, everyone. Thank you for joining and for making it an interactive session. We hope that by the end of this webinar, you are quite clear as to how to prepare, etc., for the audits and investigations. And we look forward for you to join our next webinar. Thank you.